Welcome to the deep dive. Today, we're jumping into a topic that, well, it's surrounded by a lot of myth, isn't it? Financial trading.
Yeah, all those images of quick riches and overnight success stories.
Exactly. But we're pushing past that today. We're digging into something uh, much more grounded, more real.
hmm
Our guide for this is Marcel Link's book, High Probability Trading. He's a professional trader, and his work really lays bare what it takes.
Right, and Link's book, it's not about finding some, magic formula. It's really practical, a step-by-step guide to building a consistent strategy.
So, our mission here is to pull out those core ideas. What does it actually take to make it in trading?
And it really boils down to probability, doesn't it? Understanding the odds, not just, well, hoping to the best.
Definitely. So expect some solid practical insights today, maybe even a few things that challenge what you thought you knew about trading successfully.
Okay, so where does Link start? How does he define a, quote, real trader?
Well, first off, he flips the script a bit. He argues most traders don't fail because they lack a winning strategy, surprisingly.
Oh, so what's the reason then?
It's more about a lack of planning and discipline. That's what he really hammers home.
Okay, planning and discipline. Makes sense.
Yeah, he says the focus should be on consistency, little wins adding up over time, not chasing those huge, elusive, big scores.
So forget the home runs, basically. It's about steady gains.
Exactly. Which immediately shifts the focus, doesn't it? Less about the market, more about you, your inner game.
That's fascinating because he dives right into the mindset required, right? He says trading is like fundamentally more mental than technical.
He does. Talk about that a bit. What are the enemies he identifies?
Well, the big ones are your own emotions, ego, fear, greed, and overconfidence, especially if you've had a few wins.
Yeah, that can be dangerous.
Totally. He says controlling those emotions is actually more critical than just being super smart or having, deep market knowledge.
That's huge. We spend so much time looking at data, charts,
Uh-huh.
but maybe we're overlooking the most important factor, ourselves.
It really seems that way based on Link's approach. It's a big aha moment, like you said. Okay, so if you start getting your head straight,
Sure.
what's next? What's the foundation?
Right. So once the mindset piece is starting to click,
Yeah.
it's about building the actual structure. And that begins with a trading plan, a really detailed one.
Okay, detailed how, what goes into it.
Specifics, your entry criteria, your exit points, how you'll manage risk, crucially, and your position sizing, all spelled out.
And he has that rule, doesn't he, about sticking to it,
Oh, yeah, a critical one. Never deviate from your plan mid-trade. Don't improvise.
even if it looks like it's going wrong.
Especially then, maybe. His instruction is clear. If the plan needs fixing, you do it after the trade is closed. Analyze, revise, but don't ditch it while it's live.
That takes serious discipline. It's like having a blueprint for a house.
Exactly. You wouldn't just start knocking down walls halfway through building, would you?
No way. So how do you build that discipline? Just
Huh?
willpower.
Well, he connects it to having the right setup. The right tools help you execute that plan precisely.
Ah, okay. So, like, good software,
Yeah.
fast computer.
Yeah, that's part of it. The right hardware and software are important,
Mhm.
but also really understanding your brokerage platform, knowing it inside out.
Okay. And order types.
Crucial. Mastering things like limit orders, stop orders, market orders, using the right one for the right situation, not just firing off market orders impulsively.
Right, because a sloppy entry can cost you, even if the idea was good.
Exactly. He even mentions having like a clean, organized workspace. It all contributes to that professional approach.
Interesting. Okay, so the plan, the tools, and you mentioned risk management earlier was key in the plan. Why does he rate that so highly, even, you say, above profit?
Because it's about survival. His golden rule, always define your risk before you even think about entering a trade.
Always. Okay. Any specific guidelines?
Yep. He suggests never risking more than, say, 1 to 2% of your total trading capital on any single trade.
Wow, only 1 or 2%. That sounds...
It does, but think about it. It protects you from catastrophic losses. A few bad trades won't wipe you out.
Ah, I see. It keeps you in the game.
Precisely. Protect your capital first. That's the number one job. Profits come second, because without capital.
And trade. Got it. Okay. That shifts the perspective.
So with that foundation mindset, plan, tools, risk control, how does Link apply this to actually making the trades, the entries and exits?
Right. So both your entry point and your exit point have to be based on what he calls high probability setups.
High probability meaning?
Meaning setups where historically and statistically the odds are tilted in your favor, more than just a 50-50 guess.
Okay. Examples.
He talks about things like clear support and resistance levels, zones where price tends to react, and confirming those with volume, watching the trend. It's about finding that confluence of factors.
So multiple signals pointing the same way.
Exactly. And using stop losses and take profit orders isn't optional. It's essential for executing the plan.
Right, locking in the plan.
And another big piece, patience. He really warns against chasing trades. If it doesn't fit your specific, predefined criteria, just let it go.
Don't force it. Makes sense. So it's very systematic, very evidence-based, not gut feelings.
Not at all. Which leads to his point about methodology. It's about developing your own system.
Your own edge.
Precisely.
Yeah.
Finding your unique edge, something that gives you a consistent statistical advantage. And you have to test it rigorously. Back-test it on historical data before you risk real money.
Test.
Yeah. And then you have to stick to it. Don't chop and change your strategy just because you had a few losing trades or even a few winning ones. Consistency is everything.
Okay, that's a solid framework. Plan, tools, mindset, risk rules, methodology. But how do you actually, get better over time? How do you improve?
Good question. It comes down to a really rigorous self-assessment and treating trading like a proper profession.
Okay. How do you assess yourself?
Link insists on keeping a detailed trading journal. It's non-negotiable.
What goes in the journal? Just P&L.
Oh, much more. Date, time, the setup you saw, why you entered, where you exited, the profit or loss, sure. But also, crucially, the emotions you felt during the trade.
Tracking the psychological side, too.
Absolutely. Then you have to regularly review that journal, see your patterns, your strengths, your weaknesses. It builds accountability. Self-awareness. That's how you grow.
Like an athlete reviewing game tape.
Exactly like that.
Yeah.
And then there's the reality check aspect.
Meaning?
Link is very clear. Success is not guaranteed. Trading is hard. You need to understand the business side, expenses, taxes, dealing with drawdowns, which are inevitable periods of loss.
Right, it's not just hitting buy and sell.
No, it's a profession. He stresses that. It's not gambling. It's not a hobby you dabble in. It requires professionalism.
And what does that professionalism look like in practice?
It means avoiding the common traps. Professionals, he says, don't overtrade. They don't do revenge trading, trying to win back losses immediately after a bad trade.
Oh, yeah, that emotional reaction.
Right. They stick to their plan consistently, and they think long-term. Success isn't one big win. It's about those small edges, repeated over and over and over again.
Wow. Okay, so pulling this all together, what are the big takeaways for someone listening, whether they want to trade or just maybe apply these ideas elsewhere?
Well, Link boils it down, really. First, probability is king. Focus where the odds are best.
Okay.
Second, discipline trumps brilliance. Your psychology. That's the ultimate decider.
Got it. Discipline over smarts.
Third, plan every single trade. No improvising.
Plan the trade, trade the plan.
Exactly. Fourth, preserve your capital. Job number 1 is protecting yourself from big hits.
Survival first.
Fifth, be patient and realistic. Those quick, easy profits, they're usually not sustainable.
Manage expectations.
And finally, track everything. Your performance, yes, but also your emotions. Learn from every trade, win or lose.
That's a powerful summary.
Yeah, Marcel's message is pretty straightforward, isn't it? Success in trading isn't found, it's earned. Hard work, discipline, realistic expectations. It's about building a real career, not chasing some fantasy.
It really does strip away that fantasy element, this approach. It replaces it with something systematic, something grounded. It makes it clear that success isn't some secret formula. It's about mastering yourself and mastering your process.
Which really makes you think, doesn't it?
Yeah.
If discipline, meticulous planning, and emotional control are the keys to consistent success in a field as volatile and, frankly, chaotic as trading, where else in your life could applying those exact same principles lead to similarly high probability outcomes?